Hey everyone, welcome back to Alpha Insights. I'm Marcus, and we've got a copper-heavy conversation today.
And I'm Morgan. Good to be here. We'll dig into why one of the biggest copper producers is stirring up debate. And hey, if you have questions while you're listening, drop them at stockalpha.ai.
So, quick setup. The company we're talking about is a major global miner with lots of copper exposure, plus gold and moly as byproducts. The stock's been trading in the low 50s recently, around $52, after a run-up into the high 60s earlier this cycle.
Right, and the core argument people use for watching this name is straightforward. Copper prices are strong, production is steady, and that should lift earnings. Analysts expect a big year-over-year earnings bounce in the next report, which comes mid-April. But, and this is important, the company also has some large capital-intensive projects in the pipeline that carry permitting and execution risk. Exactly. And to add to that, the market is already pricing a lot of that good news in. Trailing valuation metrics look rich compared with history. The price-to-earnings multiple is up in the 30s on trailing numbers. And even on a forward basis, it's elevated versus long-term cyclicals.
So, the real question here is, do you believe the beaten path of higher copper and smooth project execution? Or do you worry about delays and cost overruns that could puncture expectations?
Yeah, that's a good point. The bullish case hinges on sustained copper strength and successful, phased execution of expansions like the proposal in northern Chile. If those approvals and builds happen on schedule, the upside could be meaningful. Analyst average targets are up near the high 60s, which implies roughly 30% upside from current levels.
On the flip side, the bear case is pretty clear. Delays, permitting friction, or a copper price pullback would expose a stretched multiple. There are also geopolitical and regulatory complexities at some of the big operations, which can surprise quickly.
And remember the Grasberg situation? The company extended mining rights there, which reduced some immediate regulatory uncertainty, but brought complex terms and near-term costs. That kind of deal can calm markets or introduce new questions, depending on the fine print.
Totally. Let's break down the numbers in plain English. The company converts higher copper prices into earnings pretty well. Recent quarterly revenue showed that. Liquidity looks reasonable. The current ratio is a bit over 2, which suggests short-term obligations are covered. But the big caveat is capital spending. Major projects are expensive and multi-year, so free cash flow will ebb and flow with CapEx timing and commodity cycles.
Right. On valuation signals, the price-to-earnings on a forward basis compresses toward the peer range, but the price-to-earnings-to-growth metric is elevated. Markets are pricing strong growth. A baseline fair value estimate using a forward multiple plus a conservative cash flow discount lands around the mid to high 60s, but that is very sensitive to copper price assumptions and project CapEx.
Interesting.
Operationally, the company has a wide moat. Large, low-cost, long-life deposits and integrated operations across continents. That gives it optionality. Open pit, underground, and byproduct streams. But a moat doesn't eliminate execution risk.
And for listeners who trade this name, technically there are some clear reference points. Analysts and traders are watching a range. Resistance around $58, and then that psychological high near $70, with support closer to $45, and then deeper near $38. Intraday volatility has picked up, so position sizing and risk rules matter.
Upcoming catalysts to watch. The mid-April quarterly report will be a big one. Look for commentary on copper volumes, guidance on next year, and any updates on the Chile permitting timeline. Also, keep an eye on global copper momentum and macro data tied to industrial demand.
Honestly, I was a bit surprised by how concentrated analyst sentiment is. The consensus skews positive, lots of buy and outperform ratings, but there are a few cautious voices pointing to the same project risk we've been discussing.
Which makes sense. When most models bake in a continuation of high prices and smooth project delivery, the stock becomes sensitive to any deviation. So data flow matters more than ever.
Short reactions. Right.
Interesting.
Let's wrap up with practical takeaways. First, the upside case is real if copper stays strong and expansions proceed. Second, valuation already assumes substantial improvement, so misses would sting. Third, watch permitting updates and the next earnings call closely before making any allocation decisions. And remember, this is a cyclical play with project-level execution risk.
Agreed. For long-term investors, monitor permitting milestones and realized free cash flow versus CapEx. For shorter-term traders, track daily copper moves, earnings commentary, and that trading band we mentioned. Above all, manage position sizes. Execution and macro swings can be abrupt.
All right, that's our take. Key points in one line each.
1. Exposure to copper is the core driver of upside potential.
2. Valuation already prices strong outcomes, so execution matters.
3. Watch permitting, CapEx timing, and the mid-April earnings update.
Got questions? We'd love to hear from you. Head over to stockalpha.ai, where you can ask us anything and we'll answer live. And while you're there, check out more market content and drop your questions into the Q&A feature at stockalpha.ai.
Thanks for listening. I'm Morgan.
And I'm Marcus. See you next time on Alpha Insights.